students. Today we will study about the topic called partnership dissolution. What is dissolution? The first question. What does it mean? It means that when there is a complete discontinuation of either business or there is a discontinuation of partnership firm. Now remember there when I talk about dissolution, they are of two types. One is dissolution of partnership firm and second is dissolution of partnership. So what does dissolution of partnership firm means? That means the company is completely closing down. That means there will be no more existence of that particular business. But when I talk about dissolution of partnership, that means the firm will continue to operate. That suppose there is a partner A, B and C, okay, and C partner retires or C partner leaves the business. When he retire or when he dies, then what will happen? The remaining partners A and B will continue their business, right? So that will come under what topic? Dissolution of partnership. So when does dissolution of partnership happens? When there is a change in the relationship of the partners. It can happen when there is an admission of a partner, when any partner retires or when any partner dies. But when does dissolution of partnership firm happen? That means when all the partners discontinue, they completely shut down their business, that is called as dissolution of partnership firm. Now let us look what is the difference between dissolution of firm and dissolution of partnership. It refers to the closing of any business. That means the business is completely coming into an end, students. We call it as dissolution of firm. But if there is some changes in the business relationship among the partners, but the business continue to operate after that, as in case of any new partner getting admitted or retirement or any partner is dying, that topic is called under what? Dissolution of partnership. So what happens in case of dissolution of firm? Relationship between the partners comes into completely end. But here the relationship changes, okay? Here the company completely closed down. Here there is no need for closure of the business. The firm can continue its operation with their remaining partners. Here this dissolution of firm can be done by voluntarily, all the partner deciding, or compulsory because of the order by the court. Here partners can only make voluntarily decision that if they want to change some relationship among the partners. Here the books are completely closed, so because the company is coming into closure. But here the book does not close. The firm continues to operate. So what account do we prepare in case of dissolution? We prepare realization account. But here we prepare what? Revaluation account. Let me recall you in chapter partnership admission, partnership retirement, we have known how to make revaluation account. So that is under which topic? Dissolution of partnership firm. But in partnership dissolution, we make realization account. All the assets and liability realize. That means we sell off all the assets and the liability, we pay off. That is what is done in case of dissolution of firm. But here what we do, here we reevaluate. We find out again their corrected revalue, and then whatever the profit or the loss is distributed among the partners. What are its effect? Dissolution of the firm does include the dissolution of partnership, but dissolution of partnership does not include dissolution of partnership. Okay. Now, what are the modes of dissolution of the firm? How we can know there is a dissolution of the firm? There are two. Dissolution without the court order can happen, and dissolution with the court order can happen. Settlements of the account. Now how the accounts are settled in dissolution? It's about section 48. Now remember, whatever the topics that we are going to study right now, we are talking about the complete closure of the business. We are not talking about dissolution of partnership. We are talking about dissolution of partnership firm, where everything is coming into end. So how are we going to treat the loss? First, we will utilize if there is some loss of the company. So where you will get the money from? First, you have to touch the profit of the company. If that is not sufficient, then out of the capital. And lastly, if still more it is required, it is partners who are going to bear in their profit sharing ratio. Then how are the assets used for settling the liabilities? First, if you sell any assets of your company, okay, since company is coming closure, down of the company is happening, the money that we get by selling that asset will use for paying firm's debt to the third party, outside party. We have to clear their debts. Then if any partner's loan is there, we need to pay that. And lastly, then the partners get their capital gets settled. Okay, if after paying all these three things, if any balance is left, then the profit is distributed in their PSR, that is their profit sharing ratio. Remember, this is the order in how the companies settle their liabilities. Now, if there is a payment of firm's debt and a private debt, how are they settled? First, we will study about the application of firm's property. Then we will know about the application of partners' private property. Now, what do I mean by firm's debt and private debt? Firm's debt means what, students? It means the debt which is owed by the firm to outsider. Okay. What do you mean by private debt? It is the debt which is owed by a partner personally. So if there is any personal debt of any partner, that is called as private debt, and firm debt is any debt which the company have to pay to any outsider party. Okay. So how are these both types of debts used for settling? First is application of firm's property. Firm property, if the company has some property, right, they can use it for settling the firm's debt first, remember. And if any surplus is left, they can use it for the payment of partner's loan. And lastly, it can be used for payment of partner's capital. Remember, first property can be used for paying first firm's debt, then paying partner's loan, and then balance towards the capital. How the company can apply the partner's private property, how they can use, if any private property of any partner is there, it has to be applied first toward the payment of his personal debt. And if any surplus is left after that, they can be used for clearing firm's debt. What is the difference between firm debt and private debt? The total amount of the liability which is owed by the firm to an outsider. And this is a liability which is owed by the partner to outsider in his capacity. That means it is his personal debt. Firm does not have anything to do with this debt. All the partners are jointly liable according to their profit sharing ratio, but here only the concerned partner is liable for his private debt. Other partners are not liable. Firm's property can be used for settling firm's debt first, okay? That cannot be utilized for settling any private debt of the any partner. But partners, yes, after he has settled his private debt, if anything is still left, that can be used for settling firm's debt. Private property, the value of the property left after settling all private debts to the extent. So that can be called as for settling firm's debt, and private debt will be settled first from the private property of the partner. Okay. Now, what are the accounts that you need to prepare while making dissolution of partnership firm? This is important. First, we make realization account. Second, we make partners capital account. Third, we make bank account. And fourth, we make partners loan account. Remember, in this chapter, we do not make partners current account. Even in the question, if the partner's current account is there, you need to close immediately and transfer the partner's current account balance to the partner's capital account. Now, what is realization account? How it is different from revaluation account? Whenever a firm dissolve. Okay, all the books of the accounts are need to be closed because the company is not going to exist anymore, right? So all the assets the company need to sell and all the liabilities they need to pay off. So in order, what will happen, they need to record. If they are selling any assets, obviously they will be returning, getting some money by selling those assets, and when they are paying the liability, the money is going out, right? So in order of all these, what is happening, they are selling their assets, they are paying their liabilities, right? This has to be recorded. So this will be recorded where? In a realization account. So realize means what? Selling off, disposing of. So realization account is what by nature? It is nominal account. Okay. So main purpose to open realization account is to what? To find out the correct profit or loss which is due to the realization of assets and liability. After we have sell off all our assets, paid off all our liability, if there is still any profit left, that will be distributed among whom? Among the partners. Okay. There can be loss also, there can be profit also. So if credit side is more than debit side, obviously it is profit, and if debit side is more than credit side, it is loss. So both aspect, whether it's profit or a loss, it has to be transferred where? It will be transferred to partners capital account, and in which ratio? Profit sharing ratio. Let us learn how to make realization account. So first step, note down what you need to do. You need to close all the assets. So what is the journal entry? Realization account debit to asset. Now there are different types of assets of the company, fixed assets and current assets, but there are certain exceptions asset which you will not record in realization. What are those exceptions? Cash balance and bank balance. Why are we not recording here? Reason is that because we are going to make a separate bank account. Fictitious assets, accumulated losses like debit balance of profit and loss account will not record here because that will be distributed among the partners. Deferred revenue expenditure like advertisement expenditure, we will definitely distribute among the partners, so we are not recording here. Loan given to a partner by the firm. If the firm is giving any loan to the partner, we are not putting in realization account. Why? Because the firm will recover the money from the partner's capital account. If there is any debit balance in the partner's current account and capital account, that will also not come here. If there is any asset against which any provision exists, remember they are transferred at gross value. For example, debtors is 1 lakh rupees and provision for doubtful debt is 10,000. So in your balance sheet, in your question, if it is written 90,000, after deducting provision for doubtful debt, you will not record debtors at a value of 90,000. You will record at which value? When you are passing this entry, you will record as 1 lakh rupees. Second step, closing all the liabilities. So what is the journal entry? Liabilities account debit to realization account. So what are its exceptions? Yes, again there are certain liabilities which we do not close and transfer to realization account. We do not close, we do not put partners loan over there. If any partner have given loan to the firm, we do not record in realization because we make a separate ledger for partners loan. Bank overdraft. If there is any bank overdraft, you will not put in realization account. However, if there is a bank loan, remember it has to go to realization account. Any reserve which is created against any asset, that means suppose like investment is there and investment fluctuation reserve is created against investment. So where you will post investment fluctuation reserve, you will put it in realization. Like other liability, you will close this also. You will not transfer in such a case investment fluctuation reserve among the partners. Remember, if there is any reserves and surplus like general reserve, it has to be transferred to partners capital account, so it will not come here. So what type of liabilities come? Like creditor or any other expenses are there, that will come here. Okay, so this is a step 2 which you need to. So we have closed all the assets, we have closed all the liability. Okay, now we'll know what are the journal entries under different situations which are given in your sum. For example, if you are selling any asset, okay, so you will be receiving a money. So the entry for any sale of any asset will be bank account debit to realization account. Now remember, in this chapter you will not write anywhere your assets or any of your liabilities name. Okay, so if you are selling asset, the entry becomes bank account debit to realization account. Any asset, if any partner is taking, okay, you're not selling it to any other third party. Instead of that, you are giving that asset to the partner of the company. So if partner undertakes any asset, the journal entry will be partner's capital account debit to realization account. If we are paying off any liability, the journal entry will be realization account debit to bank account. If any liability, partners take responsibility that I will be paying off that liability, company doesn't need to pay, then the entry will be realization account debit to partners capital account. Now there are certain expenses which the company needs to carry on whenever there is a dissolution. Okay, so those are called expenses of realization. Now if any realization expense are paid by the firm, right, so it will go from company's account only, so the entry will be realization account debit to bank account. If the firm has agreed to pay partner a fixed amount towards realization, what happens? Company says partner that you take this much amount and you carry on the realization expense on behalf of the company. So in that case, the journal entry will be realization account debit to partner's capital account. When third situation, suppose there is an actual expense, okay, and that expense of say 10,000 rupees is paid by the firm, but this expense of 10,000 was supposed to be borne by the partner. So in this case, later on, the company will take that money, recover that money from partner only, because that 10,000 was supposed to be borne by whom? By the partner, but on behalf of the partner, who paid right now? Firm. So in that case, the entry will be partner's capital account debit to bank account. However, if a partner himself pays and agree not to get them reimbursed, so no journal entry will be recorded in that case. When the partner agrees to pay the expense on behalf of the firm, the entry to be recorded will be realization to partner's capital account. This will happen, suppose any expense, company was supposed to be bearing that expense, firm was supposed to pay, but on behalf of the firm, who is paying as of now? Partner. So the entry will be realization to partner's capital account. Now, if there are certain liabilities which are paid off, right? So the entry is what? Realization to bank. When a partner discharge a liability, the liability account is transferred from realization account to partner's capital account. So what will be the entry for that? Realization to partner's capital account. Whenever any partner says that I will be paying off any liability. For any unrecorded asset, that asset is not given in your question in the balance sheet, but in your adjustment, students, it is given that you have sold that asset and you have recovered some money. So the entry will be bank account debit to realization account. If any unrecorded asset, instead of selling it in the market and getting the money, one of the partners says to you, I will take over that asset. So what will be the entry? Partner's capital account debit to realization account. If any partner undertakes that I'll pay off the liability, so the entry will be realization to partner's capital account. But in case if you're selling that unrecorded liability to some outsider, it will be realization to bank account. When a partner undertakes to pay any liability, it is always realization to partner's capital account. Now, if there is a profit and there can be a loss also when you are doing reclosing your realization account, because it's a nominal account. So in case of any profit, that profit get distributed among all the partners in the particular ratio which is given in your question. So the entry will be realization to partners capital account. In case of any loss, partners capital to realization account will be entry. If there are any accumulated profit and reserve, okay, for example, accumulated profit and reserve like general reserve can be one of the example. So the entry will be what? We need to distribute among the partners. So the entry will be accumulated profit or reserve account debit to partners capital account. And if there is any accumulated losses, what is the journal entry? Partners capital account debit to accumulated losses. Now, if any payment of loan has to be done, any loan due to the partners are paid off. This is which loan I am talking about. I am talking about the loan which the partner have given to the firm. Remember, this is not any third party loan. This is the partner who has given loan to the company. So for that we always make a separate ledger for partners loan. So how we need to pay compulsory the partners loan, because we are closing the company. So the entry will be partners loan to bank account. If later on, then we have to settle all the capital accounts because the company is closing down, so we need to pay off all the partners their respective money. So while calculating that, sometimes it may happen that you need to pay to the partners, or sometimes partner needs to bring some necessary cash. So if partner is bringing some cash, it will be bank account debit to partners capital account, and in case if we are paying partner, the entry will be partners capital to bank. So students, next session we will be doing dissolution numericals. So before that, do revise with all these journal entries and do like and subscribe my channel. Thank you.